This is the American Advisor Precious Metals Week in Review.
Hello, ladies and gentlemen. This is Joe Battaglia bringing you the American Advisor Week in Review, sponsored by Goldline. If you'd like to learn more about investing in precious metals, give Goldline a call at 877-346-2646 or visit them online at goldline.com. This morning, gold is trading up $4.20 at $11.89.40. Silver is up 10 cents at $16.50. Platinum is up $7 at $1,142. Palladium is up $15 at $798. The Dow Industrials are up 204 points at 18,128. The Nasdaq is up 50 at 49.95 and clearly looks like it'll break above 5,000 soon. The S&P 500 is up 22 points at 2110. Looking at this morning's trading, gold rallied, as did stocks, on a Goldilocks U.S. government jobs report. On the week, gold is up over 1%. The economy created 223,000 jobs in April, according to the report, and the unemployment rate fell to 5.4%. Remember, these numbers are subject to revision, and they just revised lower the March numbers. This is the lowest jobless rate since May of 2008. While the markets cheered this news, it probably leaves the Fed on track for rate increases sooner than many had hoped. As we look at the market over a little bit longer time frame, after rallying back above 1190 level, gold pulled back again on continued worries over rate hikes as interest rates on bonds have been creeping higher. In particular, the after-inflation yield on or real interest rate on 10-year Treasury seems to be moving higher in anticipation of future rate hikes. This has generally boosted the dollar, which has also been a negative influence. This week, the 10-year yield rose to its highest level since early December, and German bond yields also hit a high for the year. The ADP employment report, which came out yesterday, was a bit weaker than expected, so we have conflicting jobs reports. If there are signs that the economy is weakening, it will push back expectations of future rate hikes, opening the door for gold to push back above 1,200 again. However, I think that maybe the expectation of rate hikes is pretty much baked into certainly into the metals market, maybe even the equity market. So there may not be as much pullback on rising rates as people think. Steve Wynn, the casino magnate, said that the economy is mired in an economic funk and that talk of a broad recovery is pure fiction. He said the official employment data is rigged to make the jobs market look better, and he said that real-world inflation is much higher than the numbers the government reports. You don't need to be a Princeton economist to know that Wynn is spot on. China continues to forge new ties with Europe on military, political, and economic issues. They are improving their trade relationships while U.S. politicians bicker over petty issues. China's demand for gold continues to surge, and the same is true for India. China wants to have its currency become a reserve currency, and to do so, it needs to pretty much double its gold reserves. So the demand for gold should continue very robust over the remainder of the year. Many countries are adding to their gold holdings due to concerns about the future value of the dollar. The Hightower report cited not only growing demand for physical gold, they also highlighted that declining physical supplies are baked into the cake. They said that the supply of physical gold cannot be increased without higher prices. Moreover, technical factors seem to indicate higher prices ahead. The charts seem to show a clear triple bottom, and the low of $1,130.40 seems to mark the low in this cycle. Moreover, the trend line is now rising during this period of consolidation. Currently, support is at $1161.10, while resistance is at $1235 and then $1264. The Hightower report says that gold appears to be in the process of setting up another significant move higher. They think the monthly charts show possible upside potential of $1,433.70 and then to $1,524.40. So on balance, there's some very encouraging signs in the precious metals market, but remember, you hold gold as a long-term diversifier for your other assets. That's its principal function. To learn more about these principles or to learn more about investing in gold, give Goldline a call at 877-346-2646 or visit them online at goldline.com. Also, before you make any investment, be sure that you fully read and thoroughly understand the CoinFacts Risk Disclosure Booklet. It tells you important things you need to know, such as the overall transaction costs involved in making your transaction. You might also want to look at some of Goldline's price protection programs. They're unique in the industry. So give them a call, 877-346-2646. Until next week at this time, I hope you have a great weekend. Happy Mother's Day to all the mothers out there. And I'll be back with you next week at this same time.
The American Advisor is brought to you every weekday by Goldline International, one of the largest precious metals dealers in the United States. Over the last 50 years, Goldline has been helping clients acquire billions of dollars worth of gold and silver. Prior to making a purchase with Goldline, you should review Goldline's account agreement along with their risk disclosure booklet, CoinFacts for investors and collectors to consider. You may request copies by calling 877-346-2646 or review them online at goldline.com. All investments involve risk, and coins, currency, and bullion are no exception. Precious metals prices may rise or fall over time. Past performance does not guarantee future results. Goldline recommends that precious metals and rare coins be held for a minimum of 3 to 5 years. Contact Goldline today for more information at 877-346-2646 or visit goldline.com.